I have never seen such a robust and sustained bull phase in small and mid caps in my 33 years of career. When someone with the title Small Cap Czar tweets something like this, you know this man has gone through many ups and downs over the last 3 decades, and this video here is a compilation of his story, his successes, failures, mistakes, the portfolio, his investment philosophy, stock picking style, and much more. The Porinju story starts from a small village named Challakudi in Thrissur district, where he was born in 1962 to a lower middle class family. Financially, the conditions weren't great, so at 16, he started working along with his studies. He graduated from the Government Law College in Ernakulam and went to work in a telephone exchange at a salary of 2,500 rupees a month. After graduating in 1990 with no gainful employment in sight, a young Porinju Veliath boarded the Jayanti Janta and headed for the City of Dreams, Bombay. He found work as a flow trader in Kotak Securities, and because Porinju was a bit difficult for people to remember, he went by the name Francis, a word which is the English equivalent of Porinju. Porinju was there for the next 4 years before shifting to Parex Securities to work as a research analyst and fund manager before life came a full circle and he moved back to Kochi at the turn of the millennium. It was in Kochi in 2002 that he started Equity Intelligence, a portfolio management firm, and so begins Mr. Porinju's professional investing journey. Let me start with the PMS, and on its website, some words do pop out. Look at this. All sensible investing is value investing, far away from the noise of Dalal Street. We search for hidden gems, etc. There's a separate page on philosophy, but this seems something the marketing team has put together, which is why I sifted through a number of videos, interviews, and articles to arrive at 4 strong pillars of investing that has brought Porinju to where he is today. The first is value investing, and instead of chasing something complicated like the intrinsic value of a stock, Mr. Veliath prefers to concentrate on the area, the pool of companies from where he's most likely to find companies with a high margin of safety, and in this case, this abundance of value comes from small and microcap stocks. In fact, he said this on many occasions that growth is imperative for smaller companies and they really don't have a choice, which is why picking a stock that has deep value is a lot easier, and among his many picks are companies like Hindware Homes, Tata Elxsi, CDSL, Raymond, West Coast, Gati, etc. that have proved to be multi-baggers for him. The second pillar in Porinju's playbook is contrarian investing, as the small cap czar clearly seems to favor companies that have potential but are out of favor in the market. Upon examination, his investment philosophy seems far from conventional, and more often than not, Porinju does not base his strategy on financial ratios or business cycles. In fact, many stocks in his portfolio are illiquid. He does not keep any market cap limits, and to add more fuel to his detractors, he's come on record to say, "I feel there's a price for everything." If a company is doing well and has good future prospects, then ethics and corporate governance should not come in the way of your investments. The third pillar in Porinju's playbook is to invest in lesser known companies, and much of his successes have come from such not that popular but high quality businesses. I'm talking about investing in stocks like Gokuldas Exports and Nirvikara Paper Mills when no one was even aware of them. In this context, I came across something that Mr. Veliath said in an interview, and I quote, "I don't buy a lot of great companies with clean balance sheets, honest management, and clear business visibility. If you invest in such companies, even bank FDs would beat your portfolio returns." So for him, the odds clearly lie in these small, microcap, not that popular, but growing high quality companies. And the fourth and final pillar is a diversified portfolio, which is something Porinju firmly advocates, as it not only helps reduce the risk, but it does that without any significant change in portfolio returns. In support of this, he also allocates some money in large cap blue chip companies, although not much one would imagine, and he's also not known to be someone who has a preference for a particular sector or a type of company or stock. To sum this part, Porinju's approach to investing tells us that there is no one formula to investing success, and one should aim to find the strategy that works best for them. Our man here chose to walk a very different path, looking at ignored, out of favor, hidden gems, and he's made a lot of money for himself and his investors. As a corollary, I should also point out that a person's background is no barrier to success in any field, and Purinju's success from humble beginnings definitely proves the adage, your past does not define your future. Okay, now I want to do a deep dive into Mr. Veliat's current portfolio, and we'll see if what I've said so far is actually the case or not and what more we can derive from this. So we have 16 companies where Purinju has a shareholding of 1% or more, and as you and I might have expected, all 16 companies are microcaps with a market cap of 2000 crores or lower. The next point I raised was on growth, and when I see it on a revenue basis, there wasn't much of a trend I could come up with. But I guess that's the nature of microcaps, and unlike what we learned in the coffee can video, there is likely to be some volatility in selection when it comes to Purinju's portfolio. I also pointed to his preference for out of favor stocks, and I don't know if this is the right way to think about it, but many of the 16 stocks here have not performed well over the last 3 months while the small cap index is up 12%. Okay, next point, and from a not that popular angle, there is no doubt that none of these companies are considered mainstream and a majority of them are delivering less than 1000 crores in annual sales. Next up is diversification, and is the portfolio diversified? Check. Are they high quality businesses? Well, not exactly, at least from a ROC perspective. And to some extent, I'm a bit confused now because again, what this tells me is that Purinju does not select companies like how we see with many of the investing strategies we've covered in this channel. He is what one might call a classical value oriented stock picker. And as an example, let's take a look at RPSG Ventures Limited, in which Purinju has some 32 crores. Now, examining this company on the basis of, say, the P ratio is never going to give us the right picture because RPSG is actually an operating holding company, which is something we have previously covered on my channel. So, RPSG Ventures is an operating holding company with interests in IT, FMCG, health and wellness, real estate, and also sports, with these guys owning the IPL team Lucknow Super Giants and the iconic ATK Mohan Bagan. So there is a lot within the company, and standard metrics like sales growth, P ratio, ROC, etc. might not be the right way of evaluating a company like this. In fact, let me take a couple more examples. Let's look at Singer India, and this is one stock most of us will not touch even with a 9-foot pole. I mean, a P ratio of 330, sales growth is negative, ROC is just 4%, the company has had 4 consecutive quarters of negative operating profits, but that didn't deter Purinju from picking up a 1% stake in the company. Why? Probably because there was a recent change in management and the new MD, Mr. Rajesh Khanna, brings in many years of experience in the consumer and white goods industry. As we learned in the video on turnaround companies, a new management takes anywhere from 12 to 18 months to show positive signs of turnaround. And if it works, and I'm sure Purinju must have found the plans impressive, but if this works, then the upside will be a lot higher than the risk undertaken, and that's what Mr. Veliat is counting on. Okay, let's take another example, PG Foils. So this company is into the aluminium foil and packaging industry, again a company no one talks about, and Purinju recently picked up a 1% stake in this company. So what might have happened? And this is just conjecture on my part, but let's try to develop a story here. We start with the problem bit, and it's definitely these last 4 quarters where not only are the sales down, but there's also an operating loss to contend with. The sales were down due to a lower demand for aluminium, while the operating losses are attributable to a big depreciation in the rupee last year. And this is a risk that PG Foils always carries, as nearly 95% of foil stock purchase is linked to the dollar rate. As a result of this, the company's production came down by 25% in FY23 as compared to FY22. Pre-tax profits dropped from 63 crores to just 2 crores. And consequently, the share price is down from 486 rupees in October of 2021 to 196 rupees presently. So there are enough question marks here, but that's not how a value investor like Purinju might have looked at it. Now, I'll not get into an assessment of future growth, USD INR exchange rate, spike in cheap Chinese imports, which by the way is happening, etc. But let's stick to the math, and a big fall in share price of the last 2 years means that PG Foils is presently available at a market cap of just 229 crores. Further, the company has barely 8 crores in non-current liabilities, that is short-term and long-term borrowings, and it has cash the equivalent of over 149 crores. Yes, 149 crores, which is cumulative of the cash in hand, the bank balances, and investments the company has made in many debt-oriented mutual funds. Which means the enterprise value of PG Foils is a mere 88 crores. And if I were to assume a steady state EBITDA of 30 crores, as this chart seems to be showing, on a valuation basis, PG Foils is potentially at an EV to EBITDA of just 2.9. If this is what Purinju is looking at, then it's an acceptable ripoff from Benjamin Graham's playbook. But as I said, this is just conjecture on my part, and it's plausible that Purinju might have seen something else or might have deduced something more after discussions with the management. But my point still holds, that is, Purinju's stock picks don't seem to be something we can pull off from a screener, and I think there are too many distinct variables at play here. So how has Purinju equity intelligence done over the years? Much like what you can expect from any small and microcap focused fund, the PMS has seen some good days and some bad days. The toughest was, of course, the 2018-2019 period, when the stock price of most mid and small cap companies reverted back to the mean from their astronomical valuations. So cyclicity is always there in the markets, but you know who else is a trend follower? The media. And in 2017, Purinju Veliath was the talk of the town, and this title I gave you earlier, the small cap czar, well, the media bestowed that upon him in 2017 when his PMS fund seemed unstoppable with 5 straight years of 18% plus performance. However, the next 2 years is when a lot of it got normalized, and if an investor had put in money in his fund at the end of FY 2018, then bad luck, because he or she would have just about recovered their capital, let alone make any profits from it. In his own words, Purinju had this to say in a recent interview, and I quote, "In 2018, I got carried away and I have paid a heavy price for that. I had some highly concentrated bets in not so proven companies, and that is why 2018 happened." When it comes to stock specific mistakes, Purinju has certainly made a few, and the story of Leel Electricals is well known. In 2017, Purinju aggressively bought into the stock, and at its peak, he held a massive 8% of Leel's equity. In the same year, the company sold its consumer durable business for an enterprise value of 1,600 crores. But in a bizarre case of questionable corporate governance, the promoters diverted those funds to their own personal companies. Now, Purinju is not someone who was going to take this lightly, and in addition to documenting his agony, in a letter to his clients, he even took this up with the SEBI, the Securities and Exchange Board of India, who promptly ordered a forensic audit to be conducted in the matter. And this is where the plot thickens, with now Leel's promoters launching a counter-attack against Purinju with a letter of their own to SEBI contending that it was actually Purinju who was trying to arm twist them, and he was intentionally deflating the stock price by spreading rumors. I'm not sure what finally happened in this case, but as reported, Purinju lost about 70% in this transaction. But he learned a lot through these experiences, and what happened in the case of Leel, and also what he saw in the 2017 to 2019 period with small and micro caps. The present day Purinju is a more refined version of the past. Some of his learnings that he has mentioned in different forums include the fact that now he avoids very small and illiquid companies in his PMS, and it also holds larger businesses like Tata Communications, Raymond and Hindware that make up 50% of his portfolio. There is now a larger emphasis on expansion, and he advises investors to visualize the company's growth runway over the next 5 to 10 years. He recommends investors to continually do a risk analysis to keep an eye on valuations, market sentiments, future earnings, etc. He is now a lot more watchful of the promoters' behavior towards minority shareholders. Never buy a stock because some big investor has done a bulk deal is something he continually says because the retail investor doesn't know the price at which the biggie had originally bought those shares and how much was already held at a cheaper price. And finally, Purinju warns everyday investors that casual investing will not work indefinitely and one should look at systematically upgrading and updating one's knowledge and skills. Maybe he said that last point after reading my newsletter. I wish, but if you haven't read it, then do take a look at it where I feature some interesting tactical stories on how you can build your wealth. Unlike my YouTube channel here, I'll be focusing more on turnaround stocks, small and micro cap gems, arbitrage plays, IPOs, monopolies, undervalued sectors, etc. And if you like what you read, then do refer it to your friends, especially to people who are interested in investing. I sincerely hope you liked my take on Purinju, what he's been up to, and would consider tapping on the like button and subscribing to my channel if you haven't done that yet. Once again, thank you for your time, and as always, I'll see you 3 days from now. Until then.